So I thought I'd make this video here and just kind of show a consumer, if you're looking at getting a mortgage anytime soon, how to know you're getting the best rate. I always tell everybody I've got the best rates, or I can beat any competitor's rate, but like, what does that really mean? Is it really just about rate? How do you know you're getting a good deal? So take a look at this. So first off, I want to be clear, this is only a sample, and so the rates and terms that I'm covering today may not be offered. I am just trying to help you understand the form itself so that you know how to shop and make sure you're getting the best deal. And you can go check it out at consumerfinance.gov. There's a lot more information there that will help you understand the loan estimate. When you apply for a mortgage, the lender will be required to issue you a loan estimate within 3 business days. It's going to be the same form every single time, so you can literally sit them side by side and tell if you're getting a good deal. I think it's a good idea to always shop and compare offers. And so this is what the form is going to look like. Obviously, it's got a fake bank name at the top, and it's got fake addresses on here. But one thing you want to check out first is make sure if you're comparing offers side by side, check out the term. This is a 30-year term and a fixed rate mortgage. So if you're comparing offers and those don't match, then you're not really comparing apples to apples. So what you can see here is these people are buying a house for $180,000. They're getting a loan amount for $162,000. So if you do the math, they're putting $18,000 down, or 10%. The rate that's being offered to them is 3.875, and the payment will come to $761.78. That is just the principal and interest payment. So we'll cover that a little bit more here in a second. What you'll notice, since they didn't put 20% down, they are going to have to pay an additional $82 a month for mortgage insurance, and you'll see that last for 7 years. After 7 years, that payment's going to drop by $82. The other thing I want you to notice here is this $206 a month. That is for taxes and insurance, and that number might look different from one loan estimate to the next, but just know that it's going to be the same when you get to closing, right? Because that number has nothing to do with the lender. That is the county or the state or whoever charges your real estate taxes and whatever insurance company you've chosen. So again, this is just an estimate. If it varies from one lender to the next, you can kind of disregard that, but you do want to just know that's you're going to have to pay that in your monthly mortgage payment. And so this here is the second page of the loan estimate, and really there's 2 sections I want to focus on. First here, the origination charges. And what you're going to see here is a charge of $405. That is 0.25% of the loan amount. And that is points, and so that's a kind of a key word I hear a lot of people say you don't want to pay points, and that's not necessarily good advice, because in this case you're paying 0.25% to actually get a lower rate, and so I'll kind of come back to that in a minute here. You also see a $300 application fee and a $1,097 underwriting fee, and so these are fixed costs. They are not necessarily tied to the interest rate. And so they're probably charged across the board for this sample lender. And then again, I told you I'll pull up these lender credits on the bottom right-hand section, and I will get to that in a second. So let's say I wanted to get rid of the $405. I wanted to reduce my bottom line by $405. I could actually opt to go for a rate of 4%. And in this case, I'm showing there's no cost and there would be no credit. So that would be what I would call a par rate. And so to reduce your closing costs by $405, you could go up 0.125% in rate. Or let's say you wanted an additional $405 in lender credits. So you might be able to choose a rate of 4.125% and actually get a credit of 0.25. And so that would reduce your closing cost another $405. So as you can see by the illustration, you go up 0.25% in rate and your bottom line changes by $810. So that might be a decision you could make if it makes financial sense to go that route. And so that's kind of the end of the second page, or at least what I want to show you. And so I'm going to move to the third page of the loan estimate, and this chart here is at the top of page 3. And you might recognize the term annual percentage rate, APR, in this case 4.274. APR is not a super helpful tool for shopping around for a mortgage unless you plan on keeping the loan for the full 30 years or whatever the loan term is. What's probably a little bit more helpful of a tool is this number right here. In 5 years, you will have paid $56,582. So if you're looking at your somewhat short term, you're probably going to be in the home 4 or 5 years, or maybe you'll refinance in so many years. This kind of gives you a good idea of what the best deal is going to be on the mortgage. So if there's any questions I didn't answer for you, go ahead and leave them in the comments below.